I guess I should turn it on. What's up, everybody? Ted here, Bodies. Yesterday I've been doing, or at least the last couple of videos I did have been about passive income. Today I thought we would do what I'm supposed to do, and what I do best, smart money. What is smart money, you ask? Well, smart money is an algorithm, basically showing you that price is not random, price is planned by this algorithm, and you can, as long as I am not a very good way of having, a balanced syllabus, I guess you could say. So I try to show by example. So what I'm going to show you are different, what we call PDRAs, which would mean premium and discount arrays. I always put RA at the end of things, but to me it just means array. But it means premium and discount. Premium means the higher it gets, the more likely the smart money people are likely to sell, right? The lower it gets to the discount aspect, the more the smart money is like to buy. Now, there could be discounts within discounts. It just depends on where the wave is and where you're counting basically the wave with your Fibonacci. Now, so that's going to be your biggest thing is going to be setting up Fib, and I always suggest 61.8%. Well, of course, 50%. Always make sure you have a 50%. So you can measure things in half. 61.8% as always. And then the other one's a little bit different. 70.5, 79%. Those I learned from my mentor, Inner Circle Trader. And then I also learned an 88.6. That one has also helped me out. Now these are all basically how you kind of would find your premiums and discounts, because they usually go to these levels depending on the sentiment of the chart. And today we're going to be doing Ethereum, just because I've been paying attention to Ethereum a lot lately. So let's head on over to the chart. And all right, so as you can see here, I have it on the 15-minute. Now, yesterday, what I wanted to show you was that this is the second time he's commented that he doesn't understand my charting. I apologize. I don't know what to do. I can't please everybody. All I can do, I guess I should tweet at him to maybe watch my videos. I don't know. Anyways, not notifications. We go back. I tweeted this yesterday, right? And I was out, so this is on my phone. And I put, Guns N' Roses said it was supposed to be best. That didn't turn out too well done, did it? But it says, just have a little patience. ETH should hit the 4-hour fair value. That's what FVG means, fair value gap, between 4009 and 4018. I've been scalping ETH short for a while, and it's been working. Now, this was yesterday when it was around... it was 10 o'clock in the morning, so we'll get there. It was around 10 o'clock in the morning. I thought it was going to go straight down, but it took a day to get to where I needed to go. Not going long, and I said I'm not going long until the 4-hour gap, or for the 4-hour fair value gap. Y'all should watch the reaction in that area, right? So I put smart money technique, SMT, and ICT. ICT is who taught me this. All right, so now we go here, and what we do is I go to 4 hours. And here is that 4-hour fair value gap I was talking about. Guess what happened when it got to the 4-hour fair value gap? It went long. So now we got to watch out where it's going to go short. We'll get there. Or where it could possibly go short. All right, I'm not Nostradamus. I don't know everything. I can't see the future, but from what I've been taught, I can pretty sure I can figure some good things out. All right. Now for our fair value, what is a fair value gap? It is right here. I can probably brighten this up, or at least make this thicker. There we go. So it is whenever you have 3 consecutive candles, if there is a gap left between the wicks, that is the fair value gap. Now there's going to be different fair value gaps happening on multiple time frames, right? So just like down here, I marked them all out: 4 hour, 1 hour, 15 minutes, just in case it was going to fall all the way back down here. But as it, that was in case it got to around right here and then it was going to fall back. But it didn't. Instead, we got above the liquidity here. We got above the liquidity here. We got above liquidity here. What we do, pushed for an all-time high. That's exactly what happened. We pushed for an all-time high after it did that drop. And then it started retracing. All right, so once it starts retracing, that's when I start looking for specific things. I should have been looking, instead of the 4 hour gap was a help. And what's interesting is that the body of that candle stayed exactly within that 4 hour gap. So these are the kind of things that tell you that the algorithm works, right? That there is an algorithm to this. And trying to get, I'm looking over at my OBS and I don't know, me in the way, and I was having trouble with trying to get the background to work with me, and it's not working. So I'm just taking myself off of here and I'll just explain the chart. So 1 second, guys. There we go. All right. Give a little bit more room. There we go. Okay, so all right. So like I said, this thing filled the 4 hour candle filled that gap. Wicks are outside of it. Everything. It's just so that should tell you enough alone that there is an algorithm to this. All right. What I should have done, though, was actually taking a look at the daily chart. Why should I have taken a look at the daily chart? Well, because that would have given me a better, it kind of would have gave me maybe a little bit better understanding of where it was going to stop. But not really. Because these two can, so for one, I was looking for it to go down into the order block. The order block in this particular sequence is going to be the 2 last red down candles right here and right here. These 2. If you can't see them, what I will do is I will, instead of brush, let's do a highlighter. Those 2 red down candles right there. Okay. Again, well, instead of doing that, I should have actually did the brush. That didn't work either. All right, those 2 red down candles are considered order blocks, or bullish order blocks, I should say. Why bullish? Because right afterwards, you have a bullish candle, right, that closes above And it closes above this one here. The most, the last down candle, as long as the next bullish candle closes above it. It doesn't matter about the wicks. What matters is the bodies. Bodies and wicks. Hey, as long as the body closes above the bodies of these two down closed candles, then this is considered a bullish order block, or the reddish candle. Sorry, bearish candles are considered bullish order blocks. What does the bullish order block do? Whenever price returns to the bullish order block, you should expect a basically the price to bounce back up. Now, since these are daily candles, it could have been hard to figure out exactly where these were going, where exactly this would have stopped. But considering this, the last candle down, right, did actually reach higher than the previous candle, that tells me that this is probably that the 4-hour gap that we ran into, right, and then pulled back up, is probably only a short stop in the bigger picture of things. Because what it's done, it's reached down into, because now, this whole thing is considered an order block, right? And what we haven't reached yet is we haven't reached the body of the last candle. That's where I would consider this being fully developed. I wouldn't say fully developed, but where the actual order block would start, right? Technically, it starts up here, but considering it is actually near the top of near the high, right? I actually have the fib on right now. Well, actually, I have a different fib on, and we'll get to that in just a second. But the fib I have on right now basically goes from we're going from top to down. So you can see the 100 over here, up in the upper right hand corner, and then you see the 50 right here, right? And then you see the 0. The 0 is actually right where it needs to be. So that is where the top of this red candle is, right? I didn't realize it was already there. So with that, I do apologize for having to go back and explain that. So what I'm going to do is I'm going to draw a line all the way across, because this is where this is what is going to be, again, your bullish order block. So this is going to be the area that I'm going to watch whenever it does come back down, because I do believe it will come back down to this area. And after it gets back down into this area, we're going to have to watch and see what kind of reactions we're going to have, right, to see how it's going to go back up. But the good thing is that we are in a bullish environment, right? So what I'm going to do is I'm labeling this plus O. I needed to capitalize it, and that's why I did that. Plus OB daily. Because if I don't start marking, and I said this in another video, if I don't start organizing my time frames, I'm going to get lost. All right, so I put plus OB daily. I'm going to bold that too, and dailies, let's make it a little bit bigger, I guess. All right, it kind of overlaps with the 4-hour fair value gap, but oh well. In fact, 4-hour fair value gap, we haven't even reached there yet. Let's pull this in. But for now, let's know that this big green line is the daily order block. All right. And also what I want to do is that with this fib, I want to remove it. All right. Don't worry about all this stuff up here. We'll talk about this in a minute. We're going to take the fib. We're going to go to the bottom of that green candle to the current high. Now, what's interesting is that your daily order block is just above the 61.8. This is where we start considering it to be a discount, right? And I don't think, traders don't usually trade at 65% or, 60 or even 52% or whatever it is, 55%. But I don't know. That's why we have the fib, and that's why the 61.8% is actually usually really important, even in smart money, because that is where the discount starts. However, it's also where a lot of people expect it to go. So again, that's just where the discount starts, and then that's where we start looking for the other levels for it to possibly trade to. That's the 70.5, the 79, and the 88.6. Okay, so considering that the 61.8 is just below the daily, what I'm going to do is I'm actually going to put a line all the way across, right? And then I'm also going to label it, and I'm going to label it daily So this was going to be daily discount. And I should probably mark this green because green we're going to be buying, right? Because it's on discount. All right, there we go. Daily discount over here on green. Now, flip it upside down. And you look for the 61% here. There it is. I'm going to do the same thing. Line across. And then this one I am going to make red. I dot these when I do the discount premium arrays, just so I can separate them from other things. You can do whatever you want. Just make sure you stay organized. That's the biggest thing, staying organized. And then I'm just going to put premium. Probably put daily in front of it, of course. Okay. So now, once I got down to the 4 hour, what I noticed is that when this thing came up, right, as you can see, there was this area right here where the bodies did not seem to agree. Now, the wicks would run up, and those were usually liquidity runs, right? So this is when smart money sees people are probably either trying to go short, and what they'll do is they'll just run up. They'll run up the algorithm really quick. That way, it'll make them hit their stop loss. The retail traders will get knocked out, and they'll take their money. It's that simple. So that's why you got to be careful going short on things like this. And you've got to look, especially in consolidations, you have to find something that's going to give you like a definite, hey, this is probably a good reason to go in right now. And so I looked at the 4 hours and I found this gap right here, and it was right along the top of these areas. So I thought, if it was going to fall, right, if it's going to start a fall, and I wanted to make a decent buck, I could probably go from this 4 hour gap, because I know that's because the gaps usually act as magnets. They are attracted to it, and then as soon as they usually get to it, they repel, right? Which is exactly what's happened here. Except for this one, it went a little bit through it, and I think that has to do with this red candle here. That would also be a bullish order block. So anywhere within that area, possibly halfway through, is where I would have expected it to turn around. Let's see if that's what happened. Got a little bit further than halfway through. This right here is halfway through that the bullish order block. So almost right on cue. Get just a little bit of halfway through, not a big deal. Turns around, goes back up. Now I did have my limit set here. I had two limits set at the very beginning and at the bottom of the fair value gap. Both my limits got hit. Where did I set my stop loss? Be honest, I didn't set one. That's one thing you should not do. Learn from me. Do not always set a stop loss, because that thing could aim screaming down and I could have lost a lot of money. But I just forgot to set one. Now, that being said, I'm going to go back to the daily, because now since it's hit a daily order block, right, and the 4-hour gap wasn't what caused it to go back up, I'm thinking, okay, so whenever you're looking to see what is going to cause a reaction, right, to me, it was the daily. It was the daily bullish order block that caused it to go up. It wasn't the 4-hour fair value gap, right? So now, what I did is I marked out the bearish order blocks, meaning, okay, the last up candle, right? So you have the red candle close here. This red candle hasn't closed yet, okay? The bearish candle hasn't closed yet. So if it closes below this body here, right here at 42.88, right? As long as it closes below 42.88, we're in a bearish sentiment, right? And that's why I'm going to expect it to continue to go down to possibly this OB daily. Now, right now that I'm realizing what's going on, I need to close my trades. Here we go. It wasn't a huge amount, but I had 5 times leverage. I used both USDT and I traded ETH. So double earnings. And usually what I'll do is any kind of earnings that I'll get from USDT, I'll buy the ETH with it if I'm trading the ETH. Just kind of a thing I have. If I make money off of BTC using USDT, I'll buy Bitcoin with it. So that's just what I do. Anyway, now that I see that the daily wasn't the reason, or the 4-hour gap wasn't the reason to turn it around, because if it was, it would have hit it and then probably just turned around. Instead, it was probably the daily. So let's go to the 4-hour here. Now, 4 hours is going to give us a little bit more of a definition of kind of a roundabout or a rounded wave here. All right. So It does come in, like I said, we saw it come into the daily order block. It also comes into a 4-hour order block. Now, I'm thinking down here is balanced already. It possibly is. I don't know. This thing could be going up continuously. I closed my trades. Well, actually, we'll close partial. I didn't close them out all the way. Because I was, from, I don't know how much that is. I'm not gonna worry on it. Let's just take a look to see. Let's just go from the bottom. Let's go from my good trade. So about 2% or 1.5% at 5x. I'm not mad. Not mad at all. Not gonna share how many lots I put down. But what I was saying came true. Hey, I mean, I got close enough. It may have not have bounced right off that 4-hour gap, but I learned something, and I learned that it was actually the daily order block that did it, not the 4-hour fair gap. But considering it did bounce off the 4-hour for this candle was exactly within the 4-hour fair value gap, we're good. All right. Now, what I did on the daily is I put the bearish order blocks, and that's what these red lines. I don't know what this red line is. I'm going to get rid of it because I really don't know what it is. I think it may be half. No, hold on. It may be. I don't know what it is. Oh, I think I put it at the bottom of this green wick here, just in case it was going to act as a breaker. But I don't think it didn't, so it's okay. All right. So I said these are the areas that I was going to be looking for to watch for a reaction. You always watch for your daily order blocks to watch for a reaction. As you can see, we're still climbing. That is awesome. And also what I did, I went down to the hour, right? And within the hour, as you can see where those daily order blocks are, one's here, one's here. All right, and I said I'm definitely be watching this one. And here is one that is interesting to me as well. All right, so we have a 4-hour bearish order block. Just above that, we also have a 1-hour fair value gap that has not been crossed into. This, I think, is where price is definitely going to go. What is going on here? Sorry, my phone's freaking out. Yes, I know. All right, and before I do anything, I'm gonna go to the 15-minute as well. All right, as you can see, we have pushed into both the daily order blocks. All right, and as you can see, we had reactions off of both of them. This one didn't get close to it, and it started falling backwards, and that to me did not make sense. So I was actually watching very closely because I knew it was going to do something and continue going forward because I knew it didn't get high enough to do anything. What it was this 15-minute fair value gap, or sorry, not fair value gap. It was a bearish order block. It was this one right here. See that? The bottom of that candle. All the way across, and when it came up to hit it, and coordinate. minutes. When it came up to hit it, yeah, so it did. It hit just, let me spread it out here. So the bodies did get into it, and then it got rejected. Now that, to me, considering I was looking at the 4 hour and the daily, it didn't make sense that it would just hit there and then start retracing. Because when it hits the daily, what I'm looking for, I'm going to go one time frame down to look for the next reaction, right? So if the daily, I believe that caused the first reaction, then what is going to cause the actual next reaction to cause it to go down is going to be the 4 hour, right? And right now we are into the daily order blocks. And I've also marked out the 4 hour order block. Now, what I'm interested to see is when I go back to the daily, okay, these are 15-minute fair value gaps. That's what I was measuring on the way down. And they were kind of getting hung up in here. I probably need to erase all of this stuff because that's when I was trying to do shorts, I think. So I'm going to get rid of all these because they're not pertinent information right now. What is pertinent information is this this negative 4 hour order block, right? And as you can see, it's also came back above this the body of this candle. So if it closes, when is the close? I don't know what the time is. Oh, I'm on the daily, that's why. Okay. Anyways, so I'm looking at this. There's the daily. Okay. What I need to do, go to 4 hour. That's what I need to do. 4 hour. Okay. So, oh yeah, duh. I forgot. I lost train of thought. Hello. Am I ever so ADD? Okay, so what I'm looking for next is I'm going to take this full last body, right? And I'm going to just put a fib on it, just the body, right? Measure it in half. There's the 50% right there. What I'm going to do is I'm going to put a horizontal ray right at the 50. And that is going to be at 43.54.74. Wow, I was almost right on it. 43.54.74. Why half the order block? Because whenever you reach outside of the order block, it doesn't close just yet. It's coming back in. This is an area to where you could expect to see a reaction. Now, if it's going to be way out here and come down here and close, then I would look for reactions right at the beginning of the order block. But instead, we're going to be going down to the 4 hour and watch to see what kind of reactions that we're going to get out of here. That's what we're going to need to do. I can also get rid of the Fibonacci that we just made. All right. And also, again, since this is the 4 hour order block, right? And this is also the median daily 4 hour order block. Anywhere in here could possibly be a reaction to push it backwards and just start making it go back down. Could be. It doesn't have to be. and this is, I know where people like start getting confused. Again, this is why I just say you just have to pay attention, and you just have to watch for these reactions, because you don't know. Like I said, I'm not Nostradamus. I don't know exactly where everything's going to be. I just take what my mentor has taught me. I'm trying to pass it on, and hopefully you guys can catch on as well. All right, so daily reaction here coming up. We're going to be watching for a 4-hour reaction to see if that is going to be what pushes it down. Another thing you can do, measure this, because this is going to be your another order block, because it is the last up candle before these two down candles go and close. Now, since these haven't even came up and closed above this yet, so again, even though we were in bullish sentiment, we're pretty much still in bullish sentiment. We haven't really hit bearish sentiment yet, but we are in a bearish trend, I guess you could say. Now, like I said, mark that in half, and then now what I'm going to do, first thing what I need to do before I do anything is I'm actually going to put some text on this, and first style it. Let's put this on red because it is above the premium. Yeah, daily and premiums down here. The order blocks were just above the premium. And then what we're going to do is put median. Oops. I like to capitalize things. I'm just weird when it comes to daily things. Medium, daily. I put negative OB. It just means, bearish order block to me. When I put a negative, positive means bullish. So, and then do the same thing for this guy right here. Like we put the fib on it over the body. We'll take a horizontal ray, and the horizontal ray is actually very, very, very close to the daily one, which is interesting. All right, so now we're starting to understand where we could possibly see these reactions. All right, so I'm just gonna put median 4-hour negative order block. See, sorry if my charting, this goes to you, the Twitter guy that says my charting is too hard to understand. Watch my videos, man, and you'll get it. All right, sorry, just had to say that. This is of no use anymore. I'm gonna get rid of that. All right, and what I also did at one point was I looked at the 15 minutes. The reason I looked at the 15 minutes is because I wanted to see if there was, right now, as you can see, it's possibly hitting. It's getting right underneath this bearish order block. So as you can see, these, what I mean by bearish order block, I mean, hey, there's 3 consecutive bullish candles. This is a Maribozu candle. 3 bullish candles, and then right after the 3 bullish candles, you have consecutive candles that, well, at least, consecutive bearish candles that close below the bullish candle. So this would be another area I would watch, just in the short term. I don't think this is what's going to turn it around. This is going to be one of those things that it's going to come up. It like I said, it already hit it. It's probably going to back away, and this is the whole psychology of things, right? This is where you learn how to not freak out when things start not going your way. When things start going, especially when something is pulling back like this, and you're like, "Oh my God, I wanted it to go just skyrocket and go straight through." You have to learn what is going on. You have to learn that there is a 15-minute right, there we go. Let's go with red. All right, and then we're going to go with bearish order block, right? And then I'm also going to put the time frame so I don't forget. And I'm also going to put it in the center, because if I put it in the right, it's going to be right over it. All right, so as you can see, it came up, it tapped it, it pulled back. Who knows? People could have probably freaked out at that and started selling. Guys, pay attention. Pay attention. You got to do multiple time frames, right? You got to do multiple time frames just so you can understand where you're at, what's going on, right? Because this could even still go up, right? And it could get to right here. Oops. Because that is the last, right? That's your last 15-minute. Well, I'll do the same thing I did with the last one. Bearish. Oh, I hate it when I do that. Bearish OB 15M. All right, that'd be good enough. Whatever. All right, but I know this top one is the 4-hour one, right? So it could try to shoot up here and hit this one right here. And now that it's hit the 4-hour, now I'm looking for reactions, right? Now I'm looking to see if that is going to possibly make it turn around. If not, and I personally don't think it is. Why do I not think it is? Because we still have the median bearish order blocks. We have the median of that was, I think, in the 4-hour to get to, which are really close together. The median for the daily is also, looks like was acting as some kind of support there for a second before it dropped, and now this is a breaker. Did not notice that until just now. Breakers are, all right, let's say you have high, low, and it'd actually be high, low, lower high, and then a drop below that low. That would create this, the low in that M formation as the breaker. So now whenever it comes up to that area, it could possibly be the reason as to why it drops. Because breakers, you have to understand that there's kind of a priority as to what has the most importance, right? And a breaker has a higher importance as to what can turn things around than a bearish or a bullish order block can. Again, this is all part of the algorithm. You don't believe me? Just watch. But as you can see, it did come into the 4-hour bearish order block, right? It did turn around, as predicted. But I don't think this is what is going to push it down. It could pull about halfway through, or halfway down this 15-minute candle. It could pull all the way back down to the top of this wick here on the other side. That would be closing the gap. If it did that, then I would definitely expect a run up. But it doesn't have to. It actually, if it leaves a gap, then you're probably going to see a run up. So, and right now we're getting a 15-minute fair value gap already left in here. And it's already pushing up. So as you can see, just because there is a 4-hour bearish order block doesn't always mean that that's going to be the reason. It could turn around from a daily, or from getting down into what we call a daily premium discount array, or it got into the daily bullish order block. I don't think it even got down to the discount array yet. Since it had left there, is what I mean. Yeah, it hasn't. So this is the discount array after it comes down, and we have this area coming up, right? And then it just kind of runs at this point. And so that's where I put all these different fair value gaps in to try to understand once it does come back, which one is it going to go to? Why? Because it's going to go below the discount array. It's just part of the algorithm, right? But first we had to get above the premium, which we did, right? So what this thing did is it came all the way down, right? It got to about the 50%, about halfway through that one big wave, right? So from here to here, right, this huge wave we put a fib on. It pulled back about halfway. Coming up here, now we're looking at the negative order block. We don't know if that's going to push it back, but it could. But I was personally expecting up in this area. I thought it would get a little bit past that order block. Two reasons why. Remove that and let's lock it. All right. Two reasons why. And I could be wrong on these reasons. One, even though these are almost even, the bodies are about even. So, and it looks like whenever it did come up, it did basically hit the body. The high of this coming up did hit the body, got about to the high of the body. Okay, so I thought it might have got above that to break out, to break some liquidity that could have been sitting above here. Now, liquidity that sitting above areas like that are in the form of sell stops, also buy stops as well. People that think they're going to catch a breakout, or people that try to sell short and have a very short stop loss. So there's a lot of orders kind of sitting in this area, and that's why it probably came up to where it was. And people were probably thinking it probably could have caught a breakout. But instead it fell short. And now that it's falling short, people are probably chasing it. People are probably chasing the fall. So this is why I think it's going to turn around and come back up. Now, another reason why I think it could come back up to these two areas, again, medium daily and the median 4-hour, is that it's also within a 15-minute. Actually, that's the very start of a 15-minute fair value gap, and also just it's right below that. Well, now we know as it's a breaker. So this, I'm going to draw that out. So it's going to be the lowest bearish candle. Oops. In some kind of formation like this, and then once you see something drop, once you see a candle like that drop right through it, doesn't turn around, come back up, try to touch it or anything like that, that's how you can kind of figure out that is a breaker, of what we call a breaker. So I'm going to double click on that. Make sure the coordinates are the same. That did not work at all. Give me the coordinates for the last one. Come on now. There we go. So, actually, I probably should have pulled this over a little bit further. I'm a dummy. Why did I hit cancel? Oh my god. I'm doing everything wrong today. Alright, hold on. And I'm using Coinbase as the as my chart, is because Coinbase is usually is what you're going to get as the closest to the actual real price, primarily because there's so many retail users on there. There's not a lot of good technical people using Coinbase. They're just a bunch of hodlers. Everybody else is on, unless they're using Coinbase Pro, but even then, that program, I don't even like that program. That program sucks. Your good traders are going to be on. I know Kraken was voted one of the best, but I don't even like Kraken. But I mean, your good traders are going to be on Gate, and they're going to be on KuCoin, and they're going to be on maybe even CoinEx. They're going to be on Gemini. Doesn't have a lot to do with anything. Maybe Binance. I mean, your overseas people are probably going to be using Binance, yeah. Things like that. So those are where your good traders are going to be: Kraken, KuCoin, Binance, anywhere that has some kind of leverage trading, basically. That's where you're good people, or maybe even Bybit. But supposedly, United States, we're not allowed to have I don't get our regulations just yet. We can have up to 5x leverage on trading. Supposedly, we're just not supposed to have margin. We're not supposed to have lending on it. That was it. Okay, well then let it. But I don't know. I just wish this country would get its act together and just pass a stupid crypto bill by now, because eventually they're going to make money from it, just like they do stocks and get all the insider information. They're going to make money off crypto, so they just need to pass a bill for it that's going to be positive for crypto, and it will happen. I mean, I don't even know what China's doing right now. They're they're saying you can't have crypto, or do any kind of crypto transactions or anything like that. But yet they have, CoinEx is one of their exchanges. They have, Gate is one of their exchanges. But, whatever. That's enough about that. Anyways, let's get back to the topic at hand. Oh, sorry, I got off on a tangent there. We can kind of see what's going on now. Okay, so again, these now that it's above here, we got above the 4-hour bearish order block. It looks like it's still trying to fight to try to get above that 4-hour bearish order block. So again, around in this area is where I would be looking for to possibly retrace or start the motion back down toward your discount price of that whole leg of the of this. So here is your discount right here. It is at 41.14, but to me it seems like, since the prices were already up here already, and then it just dropped down, and it kind of stayed down here for a couple hours, and then boom, it took off back up until we made the all-time high. To me, this seems like this is already balanced, right? So what I did, instead of, we may be using a different let me unlock this. We may be using a different premium discount array, okay? What I think is possible is that whenever, here we go, this guy right here, all right, and then I'm going to take this guy and pull him up here. Now, why did I do it? What? Oh, didn't mean to do that. Let's go back and let's lock it. All right, and I'm going to pull this up here. Okay, it looks like it does hit the bottom of it. Okay, to me, this is the actual what we're looking at. All right. And so this pulls down all the way, and see, you know why I said 88.6, because it came down here and it reacted right off of that 88.6. All right. So another reason why I have certain levels, right? So it came down, hit that 88.6, reacted off that, and now we're going back up. All right. And again, it's just these levels that we gotta to watch to see if there's going to be any kind of reaction. Now, what's interesting is that above, and even though this could cause, you know, hitting this breaker could push it down. Look, it looks like we just left a pretty big 15-minute fair value gap right through there. Actually, what I'll do is I will box that out so you can see that. There isn't. Okay, and then I'm gonna maybe change out the colors a little bit, the way we're not getting the same thing over and over again. Let's make this gold. Let's pull the opacity back a little bit, and let's not make it so big. And then background, let's do like a light green, and then text we are gonna do, all right, FEG 15-minute. Okay. Not 125-minute. I don't know why that would be there. Okay, so now what I would expect 100% is that we're still in bullish sentiment. I think we're going to get above the new high. Another reason I think we probably are is you see this area right here. This area right here, it almost has basically 2-3 highs that are about equal, right? And that is where a lot of liquidity is resting. Liquidity meaning that there's going to be a lot of people thinking that this is going to be a safe spot for for going short. They think this is going to be, you know, resistance right here. I don't think it is. This is not resistance. But a lot of retail traders are going to see it that way. Why? Because, all right, let's just keep going. That's why. It's exactly why retail traders think that this is going to be resistance. I don't think it is. No, it's not. It's right. You're going to have a lot of liquidity resting above here because you're going to have so many retail traders thinking that it's resistance, that it's going to break through this, and it's going to flood the chart. It's going to release everybody else's money into the trading game, I guess you will, and then the smart money people are going to run it up because everybody else is going to be going short. That is my thinking right now. But before it does that, it's probably going to hit either these bearish order blocks right here. you're going to see it come back down, probably dip into this 15-minute fair value gap. That's why it left one. And then after that, you're going to see it run. All right. That is what I got for you guys today. That's all I'm going to do. Okay. I'm not going to go any further than that. It's already been an hour. Jesus Christ. That's all you really need to know. We'll see if it happens. If it doesn't, it doesn't. And if it doesn't, I'll come back tomorrow and I'll figure out what it was that I missed. All right. Thank you guys for watching. And as always, make sure to keep your pants on.